Hi everybody, welcome back to the Claim Game podcast. I'm joined today by Lee Goodwin, who is going to be discussing underinsurance and the enormous issue that it's causing at the moment with claims that we are dealing with. First question is, what is underinsurance? Well, the technical definition from the Association of British Insurers is when your insurance cover or sum insured is less than the value at risk. Now, many people mistakenly believe that if they're insured for a lower amount than their claim value, then insurers will just write them a check out for the limit of their liability and leave you to pick up the rest. But unfortunately, this is not the case.
Let's take this pen, for example. This pen is £100 and it's lost. It needs replacing. And you are insured for £50. And the question is, how much do you get under the policy? 99% of people will answer the question, well, you'll get £50 because that's all you're insured for. You get £25 because you're 50% insured, so you get 50% of the settlement. And it's as simple as that.
I've got a substantial building claim at the moment where they are as much as 60% underinsured, which is going to equate to hundreds of thousands of pounds, purely because they never got their sums insured correct. So it's a huge issue. I would say as much as 1 in 5 at the moment.
At least, and it's an enormous issue, more so given the fact that inflation is so high. Price of materials and labour is as much as 30% higher than it was 18 months ago. So even if you were adequately insured 2 years ago, you're now underinsured. And let me be clear, the insurers on a number of our claims have said that, and let's use the analogy that somebody is 60 or 70% underinsured, which happens, that they've actually grossly misrepresented the risk. And as a result, here's the premium back and there's the policy back. So you're actually not insured, because insurers rate your risk and apply a premium based on the sums that you provide for them to cover, for them to insure. And I think it's safe to say that the circumstances to be 70 or 80% underinsured is a significant difference when an insurer is trying to rate a product.
So best case scenario if you're underinsured is that your claim value will be reduced. Worst case, insurers are going to refuse to pay the claim because you never presented the risk correctly. Be aware, okay? It is a huge issue, it's a real issue, and it's one that's affecting as many as 1 in 5 that we know of. However, a recent survey suggests it could be as high as 4 in 5. We've got an email through from Joe Simmons in Kent. Hi Joe. He's asked, what would you recommend would be the correct way to work out my sums insured? Okay, well, contents, for instance. Tonight when your partner's watching Love Island, okay, what I would suggest doing is taking a pad, pen, and sitting there and basically listing every item that you can see and applying a cost to it, okay? Include things like iPads, your rugs, carpets, curtains, sofas, anything you can see, anything that's hidden away in the cupboards as well. Take your time, tally up the total, and I think you'll be pleasantly surprised at how much value is in your lounge, okay? Work through the rest of the house, same principle, and that will kind of give you an indication of where you need to be. Typical home should be in excess of £50,000 or more, depending on the type of contents that you have, the cost, etc. And always remember that most insurance policies work on the basis of replacement value. So if you've bought something in the sale 5 years ago, okay, you need to look at the price now, the current rate. Things have gone up dramatically. Materials have gone up, okay. Labour costs, logistical costs. So all these things are added to an item cost, and you'll be surprised how much things have gone up. Buildings is actually a lot more difficult. Something that most people struggle with. Would you agree?
Yeah, the biggest trap that people fall into is insuring a property for what they've paid for it, which is the market retail rate. That's not an insurance rebuild rate. If I gave you an example that a property in Grimsby, for example, can be purchased for £150,000, but might take £500,000 to demolish it and rebuild, you'll see the trapdoors that are there, and then and the converse in London. You know, you can buy a house for £2 million, and it can be insured. It needs to be insured for £750,000. So the only way really to do it is to get professional to do what we call VAR, value at risk, which effectively they break down every element of the build, apply a cost to it, apply buffers and inflationary percentages, and arrive at a figure. And you know, remember that it's not just the bricks and the roof and the windows and everything that everybody sees that you need to factor in. It's also the foundations, the utilities, the services, the professional fees, the regulatory fees, the VAT. You know, when you start putting all of this in a pot, you realise that actually what you think you can rebuild your house for is probably well under what it needs to be. And also, going back to Dean's analogy with regards to the contents, it's market rate. It's not what your brother-in-law or your family member or what you can do if you're a builder. It is what it would cost a bona fide VAT registered contractor and all the professionals around that to reinstate that property.
It's worth remembering as well that you're never going to get penalised if you're overinsured, okay? So if you're kind of working on a band of £400,000-500,000, add 10%, add 15% to what you believe the cost should be, or what cost you've been recommended to put down for your buildings, because you're never ever going to be penalised by insurers for that. Yes, you may pay more of a premium, but ultimately, in the event of a claim, you know, you've got the confidence to know that that is never ever going to be an issue with underinsurance. Speak to your broker, speak to your insurer, okay? If you're really confused about the numbers that you should be providing, they're obliged to give you direction. Okay, they may direct you to a chart surveyor to get a formal value on your buildings. However, most good insurers, most good brokers will give you the advice over the phone. If they don't, you're with the wrong insurer or you're with the wrong broker. Okay, so I've got another email through as well from Serif Ahmed. Hi Serif. And she has asked, I've had a fire in my kitchen recently, not sure if I should get an assessor, or if indeed, when should I get assessor on board? My answer to that is straight away, don't hesitate, okay? Because the longer you try and manage and deal with the claim on your own, the more exposed you are of your actions. You may have made an agreement with an insurance loss adjuster or directly with the insurers that you believe is the best course of action or the best remedy. 9 times out of 10, it's not, okay? So by all means, get in touch with Oakleafe anytime. We're a 24/7 company. We operate round the clock, okay? Free advice on the phone. We can direct you with your policy. And if you need representation from Oakleafe, we're happy to help.
I'd just like to add to that and promote the industry really as well, because certainly with complex or larger losses, you're potentially prejudicing your position by not having the right advice. And the right advice comes from somebody on your side. And in an insurance claim scenario, that's an assessor. A loss adjuster is protecting their principals, the insurance company, and obviously adjusting the loss. You would not go to court without a lawyer. You wouldn't go before HMRC or a tribunal without an accountant or a professional. So why are you playing with potentially the largest asset in your life, your business or your home, without the right advice, the right support? And you know, it's not that we're magicians. It's just that we understand the process, and it's what we do all day long. So we can sometimes make a difference of 30 and 40% to your achieved settlement, because we understand what you're entitled to and because we understand how a claim is put together, which is half the battle really.
We are going to be covering the loss assessing industry and in particular Oakleafe Claims, how we've evolved over our 8 generations of existence, answering a few questions, sharing a few stories, and we'd love for you to join us on the next podcast. So stay safe everybody. Thanks for joining us, and we'll see you soon.